Hello everyone. Have you ever wondered when is the right time to refinance? Join me in this video as we evaluate the savings when we refinance with a lower interest rate. So let's get started. Three factors that impact our savings when we refinance. The first one is of course the interest rate. The lower the interest rate, more the savings. And the second one is the loan tenure. So I'm assuming that this is the number of years passed on our current mortgage. I'll come to the assumption of 2 years in a bit. And the third one is closing costs. Yeah, I understand the closing costs are coming again, and then yeah, they are roughly around 10K that would come. Depending upon the type of mortgage lender that you're taking from, this might be waived, but then this would be added back in the interest rate. So just check out when you're shopping around. Just check that out. Let me explain you my assumptions in a bit, okay? Now, for interest rates, there are three types of mortgages. One is the 30-year fixed and 15-year, and the adjusted rate of mortgage. Most of my audience would go with 30-year versus 15 years, so I'm kicking 15-year out. Now, if you have to compare the 30-year and adjusted rate of mortgage, uh, as per the history, most often adjusted rates of mortgage are pretty high when compared to 30 years. So for this reason I'm assuming that we are going with 30-year fixed mortgage rate. So if we are looking at 500K mortgage at 30-year fixed interest rate at 7%, most important thing when you look at this chart is that most of the interest is paid in the first 10 years. It doesn't make economical sense if you want to refinance after 10 years. I mean, of course, you do not want to pay more interest on that. And the second one is in the first 2 to 3 years, you would roughly pay 85 plus percentage just on the interest rate. If you're paying a $1,000 mortgage, roughly 150 is actually going to the principal, and rest all is the interest that you're paying to the bank. That's the reason I took 2 years. Let's compare no refinancing versus refinancing at 5%. But if you were refinanced at 5%, you would pay 2 more years, but given the mortgage payments are lower, the total payment and with the closing costs, you would roughly pay around 955K. Whereas with no refinancing, you would be paying 1.1 million, and the savings with refinancing at 5% would be around $163,000 versus 3% would be $366, which is humongous. Given this, you might ask, hey, what's that interest rate, at which I would at least save some? To estimate that, I have actually started looking at 6.2%, but then we were making roughly 3.7K worth of losses, which means the closing costs are outbeating the savings in this case. But if the interest rates were to just fall down to 6.1%, then the savings are $7,600. In summary, if you have bought a home at 7% for 30 years of fixed mortgage interest rate, just aim for at least 6.1% or lower for better savings. The lower, the better. If you have any questions or your case is specific, please leave us a comment. I shall respond promptly. And as always, thank you for watching. Bye bye. Have a good day.